Hello, this is Professor Reynolds again, and this presentation is on basically financial markets, primarily the stock market. So I'm not sure what experience you have in the stock market, but a publicly traded stock is traded on one of the different financial markets. You can see here that we have the New York Stock Exchange, which is the oldest, and this is really what most people think of Wall Street. It was started in May of 17th of 1792, so it's been around for a while. It used to be the open outcry based system, so that means that you'd had someone that trades, let's say, Coca-Cola stock, and the brokers would, or the traders would say, well, I want so many shares of Coke at a certain amount, and other people would call out prices and um, sort of like if you see the movie Wall Street, you might see something like this. It has now been replaced by an electronic system. But you can see here that as of last June, there was $46 trillion of value. Now, as of right now, the Dow Jones has exceeded 40,000. Talk about what that is in a minute. Sorry for the yawn. Um, the second market is really called the NASDAQ, the National Association of Securities Dealers Automated Quotation System. So this has always been electronic. It's the largest electronic screen-based market, as you can see. There's over 4,000 companies, and some of the well-known companies would be Apple, Microsoft, Facebook, which of course is something else right now, Netflix. As of June 2022, it had $17 trillion of market value. Trillion dollars. And then you have the American Stock Exchange, which is mainly exchange traded funds. So if you were to buy a stock, you would normally go through a broker. And there are several different brokerages. If you are a Bank of America customer, they have a brokerage. If you're a Schwab, they have a brokerage. There are numerous brokerages where you go and online you can say you can open up an account and you go, okay, I want to buy so many shares of this stock and I want to buy it at whatever the market is selling it. So normally what people will sell it for is going to be less than what you will uh, be able to buy it for. So that is so if you buy, you're going to buy a little more, pay a little more premium than what you're going to get if you sell it. So as long as you have funds, you can get the brokerage account and you can buy and sell stocks online. It's very simple. Let's see if this comes up. Well, that's coming up on another screen, so we'll just anyway, you might want to go look at the greed is good part of the movie Wall Street, and that's going to be on YouTube. All right, so what is the stock market and how do we know if it's good or bad? Well, there are indices. There are what's called the Dow Jones Industrial Average. It's been around since 1896, and it's a representation of a number of stocks, 30 stocks, 30 that are supposed to be what called blue chips, so solid companies that have been around for a while, although the companies in the Dow Jones Industrial Average do change. This is the beginning of the year. It was up 6,360 from the prior year, or 20%. But the prior year, it had gone down 9.7%. And you see at this writing, we're already up to over this 40,000 mark. And that's here in the summer when I'm doing this recording. Okay. Second oldest US market index. So again, it's index of blue chip stocks, 30 large publicly owned company, and it's price weighted. So if you have a stock that's at $300, it has a bigger impact than a stock that's at $20. So if $300 goes up 10%, it will affect the Dow Jones Industrial Average higher than the $30 stock that goes up 10%. Here's some of the names: 3M, American Express, Apple, Boeing, Coke, etc. Again, between 1971 and 2023, the Dow Jones Industrial Average was up 7.3%. So that's over the last 52 years. It doesn't include 2024. Had you invested $10,000 in 1971, it would be worth $418,000 in 2022. So over time, you can see that at least the Dow Jones Industrial Average, if you had had these stocks, your portfolio would have increased to 418,731. Now you have the NASDAQ. Now the NASDAQ, of course, are some of the same companies, but these are companies that are on the North American Securities and Dealers Association. All right. So they're listed on the NASDAQ, which in 3626 listed securities, or I'm sorry, in 2022 had 3,626 listed securities. And again, some of the same names: Microsoft, Amazon, Meta, Alphabet. You can see this graph over time. Of course, that's positive. Now, from 1971 to 2023, we have an 8.38% compounded annual return. Now, that's not inflation adjusted. So you do have to take into account that if you offset that with inflation, that $10,000 invested in 1971 would be worth $1.472 million in today's dollars. Still not a bad amount. I think we would all take that. But there is some effect of loss of purchasing value. Again, if you invested in the stock market, you will see that you would have a pretty nice return. And you can see that in 2022, it was not a good year. But it basically came back in 2023. And then we have the S&P 500. The S&P 500 was up 984 points, or 26% in 2023, after being down 21% in 2022. So there are certainly wild fluctuations with the S&P 500. And so this is just from a Standard & Poor's 500 stock index. It's the 500 leading U.S. publicly traded companies. Companies with the largest market share have a bigger impact. So the company with the largest market share, like NVIDIA or Amazon, if they go up, they will have a disproportionate impact on the S&P 500. In fact, in 2023, the top 5 largest stocks did well, and it pulled up all of the other stocks. See here that from 1978 to 2022, $10,000 invested would be worth $531,000, almost $532,000. All right. Global 500. These are 500 companies with aggregate sales of $37.8 trillion. And so that's an increase of 19% from prior years. So pretty hefty increase in sales. Global 500 company revenues from China exceeded U.S. companies for the first time ever. And so this is the 2022 Global 500. And you can see here that the company with the highest revenue in the world is Walmart, which in 2022 was $572 million. They're well over billion. They're well over $600 billion at this point. The most profitable company from a profit standpoint, so in other words, how many of the dollar in revenue, how much do we have left over after we're paying for everything? And so Saudi Aramco had 26 cents left over from every dollar of revenue. But the most profitable company in the world, of course, was, well, second most profitable, was Amazon at $94.6 billion. So Amazon in 2022 had $572 million and made almost 14 billion. Apple had $366 billion, but only had or had a $94 billion, $95 billion profit. So they kept almost 26 cents on every dollar as well. Fortune most admired companies for 2023, Apple, Amazon, Microsoft. You can see these. So if you're looking for a job, this might be some of the companies that you might want to target. Speaking of Walmart, here are the biggest employers in every state. And you can see that Walmart is huge. Look at that. Walmart in the South, especially, is the biggest employer in just about every southern state except for South Carolina. So, what affects stocks? And so, this is something that you'll be doing for your project. But what affects stocks? Well, negative, positive news about the stock. So, for instance, if you have a stock and investors are expecting you to grow your earnings 10% and you grow 20%, then that is a positive impact and you will most likely see the stock go up, probably significantly. On the other hand, if your stock you expected 10% and you got 5%, then that's going to have the reverse of impact. And most likely you'll have disappointing news. So around the time of earnings announcements, and you will get some because quarters end on usually the fiscal quarter. So uh, March 31st, June 30th. So over the next few weeks, you'll have stocks that are announcing their earnings. And then company projections. If they say, hey, we had a good quarter and we expect this to continue, then that's a positive sign. Sometimes companies don't give out guidance because they don't want to be, trapped into, hey, didn't know what you were talking about. But then the economy also has an impact. Negative and positive news. Inflation. If inflation is higher, we've had a period of high inflation for the last 3 years. It's starting to go down. That will impact the Federal Reserve. If inflation is high, then the Federal Reserve will raise interest rates to dampen the economy. So those kind of go hand in hand. Jobs reports, depending if they think inflation is high and you have a very positive jobs report, then that actually will have a negative impact because they're thinking that inflation will continue. Wars, if you have wars that are unexpected, then that may have an impact. The war in Israel, for instance, had impact on the Suez Canal. So that increased shipping costs because companies were now, instead of using the Suez Canal, they were going around the Horn of Africa. So that was taking longer and it was more expensive. And so that drives up the price of goods as well. And of course, pandemics, we suffered one of those and we saw the impact that during the pandemic, after the pandemic, the stocks of certain companies went down significantly. When the pandemic first started, we had Zoom, which went up 4 times the amount. And then after that was over and people weren't using Zoom as much as they were during the pandemic, now Zoom has actually fallen to less than that. So they're down to about an eighth of what the price was. So during your stock market report, your analysis, you're going to be talking about these types of factors. There may be things that affect the whole market in general, and that will affect your stock. There may be things that affect your industry. So if you're in the same industry as Apple and Apple's sales are good, then most investors think, well, maybe that's an indication of the market for Apple, and we will see everything go up related to Apple, or vice versa if it goes down. One thing that affects the stock price over time is earnings. And you can see here, these are the S&P 500 returns and earnings, and it's not perfectly in step, but you can see that the stock price of the S&P 500 does track earnings. So for the long term, earnings are going to be the number one reason that a company that their stock price increases. And there may be inefficiencies in the market at any one time, but over the long term, and again, this is from 88 to 2018, you will see that the earnings and the S&P 500 go step in step. And speaking of what impacts a stock, here's Nike stock falls after slashing its sales output. So Nike shares are down nearly 12% pre-market after lowering its sales output. During its fiscal 2024 second quarter earnings call on Thursday, the company revealed that more than $2 billion in cost-cutting plans over the next 3 years. Nike also slashed its guidance for the fiscal year, saying it expects to grow revenue only 1%. So if you're growing revenue 1%, either you've got to really improve your profit margins or you're looking at sales of 1%, which is not a very high growth rate. And so earnings will only grow 1%. So the stock, if you're expecting it to grow more than that, which people were for a company like Nike, as you can see, they were disappointing and the stock went down 12%. All right, so that's a brief overview of the stock market. We'll get into this a little more. Again, you will be doing a project to track stocks. You will have to pick a stock of a public company and then track that. And you'll also do a report for one of your projects of a company. So, find a company that you like that's a public company and track it.